Do you currently have a mortgage on a home and you'd like to buy another one? If you do, this is the video for you. I'm going to show you some options you can use to purchase another home while still having a mortgage on your current home. Hi, I'm Darleen with Team Pratt. Today I'm going to talk about how to buy another home if you still have a mortgage on your current home. As if buying a home wasn't stressful enough, now you have to think about how to sell your home before you buy your home. If you're not one of those fortunate people that has a boatload of cash lying around and you can afford to carry 2 mortgages. If that's you, then this is not the video for you. But if you're looking for options on how to buy another home without having to be homeless, then we're going to talk options. The first option is just to buy another house. You're going to open houses, you see a house, and you make an offer on it. Your offer gets accepted. Now what? Do you have to sell your house first to move into this next house? If you're like most people, you probably do. So you bought this other house and you're just going to cross your fingers that the market is going to cooperate and you'll be able to get a buyer in time for you to close on your new house. Option number 2 is to buy with a sales contingency. And what that means is when you write up an offer, there's a contingency in there that states that you have to sell your house before you can purchase the other one. Now in this market right now, I don't know about you, but if you were selling your home and you had 10 to 12 buyers wanting to buy your home and that one offer had a sales contingency, would you accept it? Probably not. The way homes are flying off the market these days, a seller does not have to wait for you to sell your home in order to sell their home. So a sales contingency is probably not going to be an option. But in a slower market, that could help. If the agent tells them that your house will sell within the first couple of days. If the seller is more secure knowing that being in a market that we are where it's a seller's market, they may be more apt to accept a contingency. Again, if they have multiple other offers that are similar, then they probably will not work with your offer. Option number 3 would be a bridge loan. Now, I'm not a mortgage lender, nor do I play one on TV, but I do know that bridge loans are a possibility for some homeowners / buyers that have good credit and can qualify for carrying 2 mortgages at the same time. In other words, you're going to take the money from the equity in your current home and you're going to use that equity to put down on the second home, which will allow you to make an offer without having to sell your home first. The risky part of that is that you will be carrying 2 mortgages for a specified period of time, and you also will be paying a higher interest rate because the loan is quite risky for banks or lenders to lend. If you're a risky person, then this would be a good option for you. However, in this hot seller's market right now, there are options for you as opposed to having to pray for a buyer to come and close on your property in time. Since many sellers use the equity they have in their house to purchase their next home, sometimes the dates just don't line up and you won't have the option of using that equity. The bridge loan is then paid off after you sell your current home. Now typically when sellers are getting into this type of loan, what they do is make an offer on a property, have that offer accepted, and then they're able to sell your home and try to line the dates up so that they can have simultaneous close. And if that's not an option, they do have this bridge loan that will help them to close on their next home, and then they'll pay off the bridge loan after they close on their current home. Another thing to keep in mind with a bridge loan is that if your current loan that you have, your current mortgage is an FHA loan, you likely will not qualify for a bridge loan, being that the home that you're purchasing has to be your primary residence. And you cannot have 2 homes as your primary residence. Now, if you want to play it safe, the straight up option is just to sell your house. Move out when the house is closed on and go into temporary housing. Now, I know some people might not want to do that because you have to move twice. But let me tell you, it does take away a lot of the stress. You don't have to stress about another loan. You don't have to stress about trying to align dates up so that you close the same day as your buyer's closing. You don't have to worry about storing your stuff in storage, although you may want to do that anyways if you're going to a smaller place for the short term. But it definitely relieves a lot of the stress and the emergency to find another home. What if the home that you really want doesn't come on the market right away? What if it takes a little while? What if you are paying less than you're paying on your mortgage for this temporary housing situation? Then you're in a win-win situation. So if you have a lot of equity in your home and this is an option that you want to pursue, go for it, just keeping those things in mind. However, if you're buying in a lower price range, in a sense, stepping down to a smaller home in a smaller price range, then this could be an option for you. Now, if you're one of those sellers that needs the equity, which most people do, to buy their next home, then you do have options. You do have options to put your home on the market before you find your next home. It can be a little risky, but because of the pent-up demand for listings and the lack of inventory and it being a seller's market, the buyer pool is a little bit more flexible and they're a little bit more lenient when it comes to making an offer and terms and conditions. So an option that we've given to our sellers is to rent back the home from the buyer. So essentially what you're doing with a HELOC is you're taking out an additional loan against your property, against your equity, so that $200,000 of equity that you had in the property is now $100,000. So as long as you get an equity line that you're able to pay off with no prepayment penalties, then that could be a good option for you. However, another thing to consider is if you do take out that additional loan, it's obviously on your credit, and that could affect your debt to income ratio, meaning the next property that you're wanting to buy, maybe it's a $600,000 property, it could affect your debt to income ratio. So you may not qualify for the home that you initially thought you were going to qualify for while taking out additional lien against your home. Now, one of the last and probably the least most desirable is to just extend the closing date far out. So you put your house on the market, you get a offer, you sign the offer that has great terms, but the closing date is 60, 90 days out. In some situations, if a buyer is in a rental or they're living with family or they don't have a lease, they don't have to be out by a specific time, then that might work for them. But if you have a buyer that is not as flexible, then extending the closing is not going to be an option for them. Not to mention that when your buyers get their loan, they have a rate lock for a certain amount of time. So if you keep extending the closing for them, they're probably going to ask you to pay for their rate lock extension, which can be quite costly. So you're going to have to find a buyer that is willing to be flexible enough to have you extend 30, 60, 90. I mean, what if it takes 120 days, 180 days? And this buyer is just sitting there waiting for you to find another home in this low inventory market. It's just not going to be a pleasant situation if you extend beyond a reasonable time period. If you liked what you heard today in this video, you can also obtain more information by downloading our free buyer's guide, which is somewhere in this video, down below maybe. And hit subscribe and like. We'll be putting out content every week. Until next time. Now it may seem easy enough to